It is good evening, everyone. So we've started to see a bit of good price action. Maybe this is a quarterly shift occurring, but prices are finally starting to move away from this consolidation. And if it is willing to continue, I'm going to try and keep doing more of these as long as I have time. More daily reviews, maybe some more in-depth trade reviews where I talk about the trade I took. And I look forward to doing more of those because I really enjoy doing this. It's really fun. And yeah, I'll just share my insights, share my charts, what I saw today. And yeah. Now, what you'll see is, well, first actually, let me go to my weekly analysis. And I'll only show you the NASDAQ. But there are two options here that I had for the week for the NASDAQ. So we either start to trade lower beneath the sell side liquidity, and we reverse and we go up to the highs. Because this is a consolidation, and I am noting there's liquidity at the highs as well as there is at the lows. Or a second option is we trade back up into this order block, and then we draw lower past the sell side, and we expand and displace with speed down to the sell side down here. Okay, that's the second option. And I'll also show the S&P and the Dow. You see how the Dow is much lower. That dashed purple line is slanted lower versus the NASDAQ is slanted higher. So if you're looking for shorts, it's better to look at it on the Dow and the S&P. But the NASDAQ still displays quite lower. But right now it does seem like the Dow and the S&P are the bearish leaders, which is why I might think that we're not completely in a bearish market yet. I think that tech is still holding on bullish, and it's a big part of the indices. So until all the tech stocks start to really trade lower, I think that we're not going to see a big bearish market just yet. We could still maybe see a bit more upside. It's not out of the question. And that brings me more to today, where you see that today we drew up into that order block from Thursday, the up close candle on Thursday, and then we expanded lower and continued Friday's movement. We only retraced into Friday and then continued going lower, and we're basically doing that bearish scenario for the week where we could keep going past that low. But now I'm gonna see how price is gonna react overnight. If price is gonna tomorrow, I really want to see it go up. If it's gonna go up, it might consolidate a little bit here. It might immediately reverse. But if it continues to displace and it really shows me it wants to space away from that low, like lower than this, then I can probably start to say, okay, we're going to continue going lower, right? So if we make a new low of the week and we don't start to reverse, I'm going to say that, we're probably going to continue going lower, and this may be a bearish market and this may be a quarterly shift. Okay, but for now, I'm just going to stick to today. So you see the new week opening gap. It is drawn not the best because price opened here and it closed up here. It's a little off, but we opened up on this candle and then we on this big candle there, and for the first until 9:30, right, for the first about 16 hours, we only traded higher. We had a really slow London session. And so the morning accelerated, traded higher, and then dumped lower for the bigger part of the morning and afternoon. Okay? We've reached it into a bearish fair value gap, and we left some fair value gaps up here, right, where we did not trade back into this. Granted, this is all a balanced price range, so you see that this isn't really something that you want to come back into. But we did leave some breakaway gaps that were unbalanced and not filled up here, so that is a very bearish sign when we're refusing to go all the way up there. And how the wicks were not willing to paint over these candles. Alright? This is the hourly chart. So here I'm just pointing out this up close candle from that wick down to that up close candle's high. That's a balanced price range where the wicks overlapped each other and left a balanced price range. On a lower time frame, you'll see how it's balanced. It's probably two fair value gaps with each other, sort of like up here, right? So notice how the bodies were refusing to go past that, but the bodies still reached up into that fair value gap, right? And that is what you want to see. That those are the real barriers with price action. It's not the fair value gaps. It's those wicks there that create the balanced price range. But anyways, we see how we all evening yesterday on Sunday and overnight in the morning during London Europe session, we drew higher. So the only thing that was on my mind in the morning was, okay, we're going to reverse, because all that price action probably has trailing stops. It has people think that we're going to continue going higher, and we are at a level of support right on the daily chart. This looks like a level of support, so there's lots of liquidity at the lows, which is perfect for a reversal and a hunt on those stops and on the liquidity at the lows. But yeah, you'll see the time 8:30 and 10. Those were the times we had news, and what you see happen during those times is at 8:30 we make a nice run up, all right, a nice and sharp, and it'll look better on the lower time frame. A nice and sharp run higher, right? We left a short-term high. We came back above that high, and this was a turtle soup. We expanded lower, left a 15-minute fair value gap, came back into it at 9:30 or at 10 o'clock news. So then the 8:30 news brought price higher, 10 o'clock news dumped price lower. Okay? We're trying to sell above the 8:30 open and the 7:30 open and the 9:30 open, best case scenario. And that right there, I believe 9:30 opens all the way up here, but that's a pretty good entry in premium. I would say it's one of the best entries you can get for the whole range of the day, and you could have captured, what is that, like 500 points today. So today was a very crazy day. We dropped by 500 points on the Nasdaq, which is a lot. We haven't seen a 500 bullish day quite a while. So no, not like this at least on a Monday. But now we'll get into the day. So you see, before I talk about that 9:30 that open, I want to talk about this, right? Because I saw this morning, and it did come back to a new week opening gap. It did retrace. This could have been OTE. Find a good picture. So it was around here. It retraced down into this range. It's at a discount. A lot of people might think that this is a 2022 model. Okay, they might actually want to get in and buy this fair value gap after they see a breaker here, right? Low, high, lower, low, and a market shift on the 5-minute chart, leaving a 5-minute fair value gap. That is a very obvious 2022 model, but that's not the model. That's the 2022 pattern. This is, if you're taking this trade, you're trading the pattern. You're not trading the model, right? So what happens is, I said that this was counter trend because I had my daily bias. I had an idea of where price wanted to go, so I wasn't really looking for this to work. I said I would not be surprised to see this fail. Okay, so I did not take this. I was only tape reading today because I believe quarterly shift may be happening. But I said, why would I cut the trade here? As it started running, right, it left that short-term high, came back in the fair value gap, spent some time there, and then it went higher above the short-term high, and immediately after it started to consolidate at that high. Okay, we're not expanding past that high, and we're also in a bearish environment. So I said why would I cut the trade here, right? Because that's turtle soup. Notice, right, the 9:30 open, we did the exact same thing. We could have shown maybe a 2022 model on the lower time frame, bullish price action, and we make a high, we come back, we make a new high, right there, boom. And it's the same thing up there with this high, with the 8:30 open, with the news creating a little bit of that's just a wick. I don't really, when the news does wicks like that, I don't really look at it like that. But still, these things will repeat over and over. Oftentimes, price will retrace and it'll leave a short-term high, and it'll start to go in its direction, and it's going to come back up one more time, right, just to stop out anyone who maybe thought this was an order block and shorted the order block. And that's how price moves, really. That's all price does, all right? And that's why it will leave breakers on the higher time frame. It's also going to do the same thing on the lower time frame, to the lowest time frame, all right? But anyways, that's exactly what we had here. And we had a little bit of consolidation, a slowdown, a reversal during the 11 o'clock, the start of the 11 o'clock hour. And going into the lunch hour, the 12 o'clock hour, people might be going to lunch, they might be sitting in this trade thinking this is a lunch retracement, a market maker buy model, whatever it is. But no, if you know the bias on the higher time frame, you know that this lunch macro is going to run and continue the morning move lower, right? And so that's why this was a turtle soup entry. And on the lower time frame, you can use SMT. It's present at both these cases. And in both these cases, if you're not getting in at the high, at the break of those highs, right, you can use the fair value gaps. So we expand lower, and we use the 5-minute bullish fair value gap. Watch how initially it's support, then we come up above these highs, triple top with SMT, and we start to use that. Look at that right there, that up close candle. That right there, it's using it as support. Support turned to resistance, right? I don't know. You can think that's random. I don't think it's random, but it continues going lower. From there, absolutely drops and takes out anyone very massively who thought that this might be a market maker buy model. Some Mondays will do that. It'll do a market maker buy model, but some Mondays, if the context is right, it will absolutely just continue going lower and massacre anyone trying to buy. And oftentimes, when you see overnight Asia and London go up collectively together in a trend, I would say 99% of the time, New York is reversing and it's chomping at those stops that were trailed overnight. And it'll do it quick and easy, and it's going to keep going way past that low. Right, so anyways, that's all for this review. Right, there's nothing really much else to show for the day. Just continue going lower all day. If I have a picture like this, yeah. And we closed at the lows. That's all, right?